says Friday, October 24th, 2025. Current time is 9:20 in the a.m. Eastern Standard Time. This is SP 500. Some numbers just dropped at 8:30, and obviously it was more good than bad news. A whole lot of volume spiked up at 8:30 whenever that news did drop. 189,000 shares traded of the SP 500 of the SPY at that time. What I had as potential resistance today was 675.87. You can see how it's interacting with that price level right now, how it's hovering around it. And then you have a good ghost wick down here, down to 50% level or below it. So some lucky guy or gal or algorithm got filled at a really good price level there. It's showing it's still really powerful, and that much of volume spike also shows that, you know, whatever algorithm you bought into there is expecting at least to get that price out of it, and they may unload or continue buying for all I know after that. But right now it's looking bullish, leaning into the openness, almost 922. So it's you're not getting a major downward move from all that, so it's possible it's going to continue up. Here's a quick good example of a contradictory on what you think may or may not happen. On my Mobius volume waves, it shows up as being more negative leaning, more bearish, and then up here at the buy versus sell, it shows up as being mostly buy volume. The past two candles anyway, past 2 minutes worth. So you're going to expect to go more sideways into open because of that. But the Mobius volume waves is going to show, like, you know, that it is actually staying in a bearish way. And that one should usually take precedence in the immediate term. Again, like this, it's right before market open and it's about to get pretty serious business. I have no idea what the CPI report was or how much it entailed or what it went over or like how it's interpreted or whatever. It's always hit and miss anyway, in my opinion. I don't think it really matters. But I do think that you're overbought this morning. I would not want to be going long. Only people that go long are the people that's actually in charge, and they're going to force it to go up if they want to go up. That way you just collect all the shorts that are thinking that it's a short right now, and that's how you get squeezes. And there's your market open, a whole lot of sell volume, or it shows up as being mostly sell volume in the very beginning, which again is overbought. It needs to pull back, in my personal opinion. And as you see, that first minute in the market, 9:30, that's nothing but sell volume. And the second one is starting off to be the exact same way. But that first minute definitely outpaced the previous several of any buy action that there was. That's why it's leaning mostly bearish in market open. You're overbought for sure. It needed somewhat of a pullback, and then they can rig it however they want to now. But to me, it needs more of a pullback still. And 3 minutes into the market, then you get a green doji candle. So that's more bullish as far as candle action goes. And then like that, the next one, Mobius volume waves, turns into being more of a bullish way. Look at that, 4 minutes in now, and then like the market's pushing up. Now you're bullish again for sure. But the Mobius volume waves definitely shows, like, you know, change in direction. Even when that one showed up as being nothing but sell volume at 9:33. I mean, nothing but sell volume. But then the next one is nothing but buy volume. So, let's see here. Well, that's about half and half, honestly. So it just tacked on more buy volume versus sell volume in that minute in time. That's why you're getting more bullish push still right now. But again, this has nothing to do with any sort of statistics right now in the market. This is overbought for sure. If it wants to keep on pushing, then my next level up is 680.12. is what could be more resistance by algorithms. Sometimes on a day like CPI or whatever, Jerome Powell speaking or whatever, this will come into play more so than not. But this gives another reason to why I don't need to trade on like CPI days or something, because even if I think that something's overbought or oversold, doesn't mean that it's going to happen that way with statistics and probabilities. But that's very powerful still at market open. At market open is nothing but sell volume, which loaded up the shorts, I guess. And they just piled on and start shorting it, and the buyers start buying in. Plus that doji candle with a green one showed me up as being, that small trend was reversed. Price staying above the 9 moving average also is a good example of staying in a bullish way. And it's kind of all stacked up to the 9 moving average and 50 moving average, 200 moving average, all really close to each other. I think that's 200 moving average. I might be wrong. Yeah, 200. But they're all stacked, 9, 50, and the 200. But yeah, that's definitely a bullish way still. I got an alert set for 679.96, so I may be able to take a position closer to that. We'll see. And I know I'm always like making it so you can't hardly see what's actually going on in the chart. This is what it looks like zoomed in more so instead of zoomed out or zoomed in really heavy. That's what it naturally looks like. So the way that I have it scrunched down and stuff, it's hard to tell what's what also. This gives you a better indication on what's what. But it's easier to have it like this in normal market hours at 9:30 to 4 o'clock more so. It just shows up better. But for my use, like buy versus sell volume, it's harder to see when you have it zoomed out like this in pre-market. Yeah, that was the turn point at 9:33. You had to, or for me at least, if I had a short position, I would have had to close it there until it showed up a doji candle. So it showing up perfect examples of what you need to do. Now you need to start. Now there's many algorithms that would have closed their long position. I don't think necessarily started a short position, but that may have. Staying short right now, or selling wouldn't be too bad of an idea right now because your sell volume is outpacing your trend has changed over to negative instead of continuing that massive push of momentum to the upside. If there was no slippage and I didn't have to pay fees, I'd make a freaking killing just in and out of positions. It was about half and half on that last one. It's still going to favor the negative side though. At 9, if it wants to stay bullish, then that 9 moving average needs to, and the price needs to stay above that, which it's trying to do, but it might still try to stay bullish. But once it starts cracking below it and staying there in the full body of the candle, breaks down below the 9. You get a red candle too. The red candle will be important to beat more and more bearish. Which I typically like to say that the trend hasn't changed until the color actually changes. If it goes from green to yellow, then that means it can stay in a bullish way. If it goes green to yellow to red, then you're going to kind of expect more of a bearish move. The volume's tapering off too already. It's not even 1018 yet. And the body's still staying above the 9-moving average. They're still trying to volley it right there, but the volume ain't there at all in that last minute. And it's tapering off bad. You just don't have the buyers there. You don't have the sellers either, apparently. I wish I could just punch it into, like, some AI and quickly tell me, like, is that overall good or bad, whatever CPI number that came out. It'd be nice to know. Now it's almost starting to be red candle. You're going to see more bearish action come up after that, potentially. I'm still trying to follow it above that 9-moving average of it. Yeah, that's amazing. They're still somehow they're keeping it up there. Now it's actually showing up as being a bullish candle for the Mobius volume waves. And showed up as being nothing but sell volume. In the very beginning of the market, 668,000 shares traded the first minute. Yeah, they're still trying to volley it up there. I mean, it's kind of, I imagine it's going to be more sideways though. One of the things that sucks is on CPI day, sometimes like I'll call it too the day before. What kind of had me where I was leaning more bullish still is because of how powerful it was. Because like positive 3 deviation from the anchor VWAP, that made support again. The level I had from last night, it should have been potential resistance. That all interacts with it and changes around it and makes support on it and etc. etc. Usually whenever a level that I have as potential resistance becomes support, then it's going to become extremely bullish still after that. And whoever got lucky enough to get filled down here was really something else. I was lucky. Once it breaks, and it's not wise too to get into the high breakout move, because there's so many algorithms and stuff that's been playing for holding this entire time, which is about 30 minutes or so now, or an hour or so now. They're ready to sell into whatever. If they got in down here, then they're ready to sell. That's still a decent move on the day, depending on how many contracts they got or whatever. Even if you bought in here and where it's trading at right now, it's still 0.3%, $2 move. I don't know what it is on the US. It's probably, I don't know, per contract it's probably like $800 or so. Yeah, that's incredible to me. Again, like, you don't want to buy the breakout. Chance of it like being really powerful after that isn't super duper great. But my next level up is 680.12. And that should collect more algorithms into selling up there. Because for me right now, there's nothing to stop them other than that. There's your first red candle in a minute. So there should be a little bit of profit taking some algorithms to get scared out of position, and then they're going to potentially start selling more. So this is a good example. Like, as soon as you see that red candle come up, there's nothing but sell volume. The next one over shows up as being more bearish than bullish. And you're down below the 9-moving average also, the price. It just shows potential shift in direction and how to see it and why it happens. And that's the way the cookie crumbles right there, ladies and gentlemen. As soon as it got down below the 9-moving average, I thought it was more bearish action. And then as soon as you get full confirmation that it is trying to turn back into bullish way, it's basically too late. Like, anywhere you would have got into it, you would have either broke even or been losing out a little bit. But now the 9-moving average is actually making a little bit of resistance. It's about to crack above it now, so now I'm back into bullish way. I'm back again. Now it's 9-moving average made resistance, so shorts are piling in. That was definitely make it or break it level there, the 9-moving average. And maintaining that downward stance on it is kind of important for anybody that's trying to sell or to gauge it. It does suck though, it goes back and forth. The sideways action always sucks. That's why I prefer to go for the higher and lower probabilities as far as statistics goes and the math goes. But in my personal opinion, I think it's overbought. And then the body broke above the 9-moving average here, so again, it's become more bullish again. And this is what does suck though about most of the time in the markets, is reading it at the time. Yes, it's easy reading it at the time, but predicting it like long term, like, I don't know. I just don't know. Yeah, it's just the back and forth is really something else. I think algorithms will kind of give up once they get up to a higher price level. This really is hard to stay in a trade and make any money, though. I think that's why so many people are so skittish about trading in the markets in days like today. But most of the time, CPI days are not my day, or rate decision days. Rewatching this really makes me like really bored. You don't know what the market's going to do. It's sideways, choppy. It picks a direction, and it don't pick a direction. Well, that definitely blows all my expectations on the day. I knew it was overbought. No, I'm not talking to the internet. Positive 3 deviation from the anchor VWAP made support. Some lucky bastard got filled at the 50% level. What I thought should be resistance became some support. 50 moving average became support, and the 9 moving average has been continuing to make some support. So again, I just have to wait for a higher statistical probability of creating a short position. Right now, on my setup and what I've seen many times before shows it still being in a bullish way. Even that red candle right there still stays in a bullish way. Even this one's bullish way, because the body stays above the 9 moving average the whole time. All this down here is important as well, and it can help provide you inclination on where it might go to, but it's still, as of right now, why go anyway. That's all indications it can continue to stay in a bullish way. It just stinks because I know CPI days can differ also, and that always takes precedence, and I've said that many times before, that whatever goes on in the markets as far as economic plans or Jerome Powell speeches or what Trump may or may not say, if it's something big, then that can sway markets. more so than whatever my statistics and my math comes up with.